Okay, here again to give another quick breakdown on gold and what I believe will be happening with gold. My anticipation. In yesterday's or this morning's video, I would have given a video about the directional bias and how I see gold unfolding for this week, right? So I just want to do a continuation of that and see where we're at and see how what was said has played out so far. Hopefully, I'll be able to continue to do videos such as this more consistently, and that will, I believe, will help you to understand my thought process, how I do my technical analysis, and how I do get entries for my trades. All right, especially using quarterly theory. All right, so if we remember, let us look at this. We had already established that the monthly time frame is still quite bullish. We only had a retracement, and there's nothing on the monthly time frame to tell us that or to support the idea that price will be bearish as it stands now. All right, so let's go to the weekly. On the weekly, we had established that markets opened yesterday, induced a lot of sellers, took out the liquidity of the previous week, and then rapidly reversed, right? We had a failure over here for that's on silver for price to take the previous week's low. So we had a cracking correlation, a sequential SMT. That was our indication of higher prices to come. All right, at least in the short term. So with that in mind, we look at the daily. So if you notice with my technical analysis, it's not so much about market structure or the initial part of looking at the charts and understanding what's happening is not about order blocks or swing or any market structure, so to speak. The structure will play out and it will unfold as it usually unfolds based on where price is headed. But in terms of seeing what is happening right now in the now, we have to look at the candlesticks because the candles are ranges, as is said through the concept of candle range theory. I'm not saying that that's what I'm using, but it really sheds light on the fact that trading ranges is an important part of understanding your entries and exits. So that concept is solid, to be honest. It's just that I don't see the markets that way. I see it through the lens of quarterly theory, right? So on the daily, would have had the similar outlook where we have that liquidity sweep, failure swing, and the or I should have mentioned the target, which is the previous week's high, right? All right, so if we look at the Aussie dollar, it's already at the previous week's high, right? So price has already taken that high. So the Aussie dollar is moving quite fast and much further ahead of gold and silver. So that's something to watch as well. But it's always important to juxtapose or compare the correlating assets for you to be able to understand what the asset that you're trading will be doing. All right. So went through the daily. I had even gone ahead to show you that there was a precision swing point that was created on the 4 hour time frame at market open. So on gold we had a up close candle, on silver we had a down close candle. That's a precision swing point. And in my mind I was waiting for the 2 o'clock candle to see how that closed as well and whatever candle would have gotten. We got a precision swing point there as well. And I was also looking to see if I could get ideally an entry in the wick of this candle. But guess what happened? We had another cracking correlation. So On silver, price traded down into the wick. On gold, it failed. And we also had another cracking correlation between the 6 o'clock and the 10 o'clock candle that gave us that final push towards the highs. And so that 10 o'clock candle failed to sweep the low of the 6 o'clock candle, and it did. It swept the low on gold on the 6 o'clock candle, right? So at 10 o'clock, there would have been an ideal opportunity to enter a trade if you would have missed the 6 o'clock and the 2 o'clock entries. Let me show you what I'm referring to. All right, so on the 15-minute time frame, which is where I was looking for my entry from, we had, so allowing price action to play out. Remember, I had mentioned, if you have watched the video already, I had mentioned that I was waiting for the retracement to look for an entry. There was not much of a retracement after that large expansion, but the fact is the gap was there. The new week opening gap was there to be filled. It didn't have to be filled immediately, but based on the confluences that we saw in terms of how the weekly candle opened, it opened, swept the previous week's low. So we anticipate that push up after that. So what price did was, remember, I was speaking about inducements. You want to see inducements happening before the true move takes place, right? So we had two fair value gaps that were created in the premium side of the range that was created here. What I noticed was that price created these lows inside above the 50% mark of the fair value gap, right? And then in the New York Open hours, 9 o'clock to 10:30, we had price swept those lows. So that was what is indicated here. This was the precision swing point that was created on the 4 hour time frame, and price swept all of that, right? In watching price action live, remember you have to be making decisions in lifetime, not in hindsight, so to speak. In hindsight, it's always beautiful to see, and we can always say all the wonderful things about what could have been and what we may have done and all of that. But in lifetime, you have to really make that decision based on your experience, your trade plan, your risk, and all of that you have to put together to tell you that, all right, this entry will be good. And this is when I should be entering the market, right? So the ideal time to be entering a trade is after the liquidity has already been taken. And in this case, we saw a liquidity sweep. So we had this huge candle. This is the candle that created the sweep on the liquidity. We had this candle that was created at 8 a.m., created a balanced price range, basically. And when I saw this, my mind started to go towards, oh, it's time to start looking for an entry. So price retraced, so immediate rebalance basically. So we had this expansion. When price came back into the fair value gap, I entered in here, stops below the low of the gap. So in entering in here, because remember I'm looking to get a second entry based on the entry that I've had from the 30th of March, which I would have referred to in the video earlier, right? So I took an entry there because the entry was logical for me. And I would have been I would have been stopped out here. The second entry came when price traded above these highs, and entry was somewhere in here again, right? So I got a couple of entries in, and there was another cracking correlation here. We had a price took the low here, so we had two inducements in terms of this low that swept those lows, and then this one came and swept everybody and filled the gap almost, well, completely. And this one failed to do same. So with that said, the entry inside here was favorable, and You just, as I said, you just have to follow your plan and stick to it. You're not always going to be right, but once you're confident that you followed your plan, then you should not really be worried about it so much. Okay. So I'm still in that trade. As I said, I'm holding for the long haul because I do believe the drawn liquidity for the week is that weekly high here. All right. What price does after that, we're yet to see. I still think price is going back bullish overall, but because all the cracks in correlation are bullish, so there are signs of bullishness. So, but we know that when price gets to areas like these, we can see reactions, reversals, retracements, whatever it can be. We can get some reactions, but I think with gold, we just have to trade what we see, not what we want to see, as I would normally say, and yes, that does stick to your plan. Manage your risk, you should be fine. And yeah, I think the eventual target is here, but we go one step at a time. Right. Yeah, that was basically what happened in terms of what I was seeing based on my initial analysis, how I eventually followed through on that, and how I took the trade. Right. So thanks for watching, and I hope to see you soon again. Take care. Bye bye.